Welcome. In this video, when will Xcn coin new boom come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we look carefully at the charts, we observe that the price action has started to take on a rather remarkable and technically promising structure. Especially the recent price action is signaling a very strong reversal pattern. This is the so-called W pattern, or double bottom, which is known as one of the most reliable reversal patterns in technical analysis. This pattern is an important indicator that the price is weakening in the downtrend and that buyers are now coming on the scene, preparing for the market to change direction. In the charts we analyzed, the price formed the first bottom here after having previously declined to a certain support level. Then, there was some recovery, and the price rallied, providing some short-term relief. This recovery was followed by a second bearish move that brought the price back to the same support level, where the second bottom began to form. This is the basis of the W pattern. The second bottom is usually a zone where traders test the market, where sellers lose their strength and buyers become more active. And right now, the price is starting an upward climb from this second bottom. This upward movement can be considered a very positive technical development. This is because the rise from the second bottom is usually more decisive and stable than the previous rise. This shows us that the buyer pressure in the market is gradually increasing and the momentum is starting to build upwards. In addition, if this movement is supported by volume, it would be a very positive sign in terms of the permanence of this rise. This is because if there is a bullish breakout after the second bottom, it means that the W pattern has been completed and a strong reversal signal has been generated. W patterns often symbolize a trend reversal and represent the beginning of new buying opportunities for traders. Especially in falling markets, the formation of this pattern indicates that the downtrend is coming to an end and a new uptrend is at the door. Looking at the current technical structure, this W pattern is developing quite clearly, and the price has been moving steadily upwards from the second bottom. If this movement continues, we could see a climb towards the neckline of the pattern, the peak between the two lows. When this level is broken, the W pattern is fully confirmed and the price is targeted upwards by the distance between the bottom and the neckline. One of the most important details in this process is the psychological impact of the pattern. The W pattern is a structure that rebuilds confidence in the market. The rise after the selling pressure at the first bottom shows that investors still don't trust the market. However, at the second bottom, when the price reaches the same level again, the weakening of the selling and the subsequent rise indicates that buyers are more determined and confidence in the market has been restored. This has a positive effect on the overall market sentiment, and more investors are likely to join the uptrend. In the current chart view, the upward trend of the price after the second bottom can be interpreted as an extremely valuable and promising development in terms of technical analysis. At this stage, the price is expected to move towards the neckline to complete the pattern. If this level is broken to the upside on strong volumes, the W pattern is fully worked out and the price is likely to move towards the target areas. Such patterns generate very reliable buy signals, especially for medium and long-term positions. In other words, the fact that the current structure technically gives such a strong turn signal creates a very positive atmosphere in terms of bullish positions. But we cannot decide the analysis only with the pattern. Let's look at the other metrics. Keep watching. When we look at the current structure on the chart in detail, we can see that a very clear wave structure is forming within the framework of Elliott wave theory. In the current situation, the price movements correspond to the second wave zone according to classical Elliott analysis. This wave is usually defined as the correction that comes after the first bullish move. According to Elliott theory, these second waves are often horizontal, corrective, and consolidative. This means that the price may move in a directionless pattern for a while. However, this shouldn't scare investors, because according to Elliott wave principles, the strongest and biggest price move, the third wave, starts right after this sideways period. Although the second wave may seem to be weak and sideways in terms of price, it is actually a critical period in which the foundations for the third wave are laid and energy is gathered. In this wave, the market may experience uncertainty for a while. This is because after the rise in the first wave, investors sell profits and new buyers are cautious. This causes the price to fluctuate in a horizontal band for a while. However, this is a temporary period. According to Elliott theory, the second wave never dips below the initial level of the first wave. Therefore, every pullback within the second wave is a harbinger of a potential third wave. Looking at the chart structure at the moment, it appears that the price is nearing the end of the second wave and has now reached a critical threshold in terms of direction. If it moves in line with this prediction, A third wave is expected to begin next, which is a very positive development for investors. The third wave is defined as the longest and strongest movement in Elliott theory. It is usually during this phase that investors make the most gains. This is because the majority of the market is now convinced that the market is bullish and the buy side becomes dominant. When the third wave begins, the target levels of the price are usually set according to the Fibonacci expansion ratios. The ratios 1,618 and 2,272 are particularly critical levels here. These ratios, when calculated based on the length of the first wave, indicate the minimum levels that the third wave should reach. As we are currently nearing the end of the second wave, the probability of the price heading towards these targets is quite high in case of a third wave. Therefore, we can say that the current structure provides a positive ground both technically and psychologically. The horizontal course during the second wave actually paves the way for the third wave to rise more strongly and steadily. Meanwhile, market players continue to position themselves and technical indicators mature. For example, volume, momentum, and indicators slowly begin to gather strength. This allows the price to rise with strong support at the start of the third wave, not only technically but also psychologically. According to Elliott analysis, the third wave is not only bullish, but it is usually the phase when the price moves the fastest, when momentum peaks. Therefore, price behavior after the second wave can be interpreted as a harbinger of a strong future rise. In this context, the current price behavior looks quite promising, because the market is currently showing second wave characteristics, and when this process is completed, the probability of the third wave starting will increase in line with both technical patterns and investor expectations. In this case, it would be highly possible for the price to move upwards quickly and decisively, reaching the 1,618 or 2,272 levels. These levels are target points for investors with a very high return potential in the medium and long term. When we look at the chart more carefully, we start to observe a very remarkable movement in the MACD indicator, which we often use in technical analysis, and which is especially important for traders to catch trend reversal points. Especially when we take a close look at the histogram structure of this indicator and the relationship between the MACD line and the signal line, we can see that the possibility of a significant convergence and a potential crossover from the bottom to the top is gaining strength. Such a crossover is often interpreted as a buy signal in the world of technical analysis and could signal the start of a new uptrend in the market. Therefore, the current chart structure is promising for investors and should be followed. This upside crossover in the MACD indicator creates a positive atmosphere, not only in terms of technical indicators, but also in terms of market psychology. Because this crossover means that the short-term average starts to rise above the long-term average, which indicates that the price is accelerating upwards and momentum is starting to increase. Such a clear upward signal on the MACD, especially during periods of uncertainty in the market, is considered a strong confirmation by many traders. This creates a strong perception that the buy side is gaining strength in the market and attracts new purchases. MACD crossovers are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.